Following is a presentation of TFNN.
Good afternoon, folks. Welcome. I'm your host, Steve Rhodes, and thanks for joining me for our October 26th edition of Celestial Charting. As we begin this, it's about 3:05, and the Dow's up 137. The S&P is up 10. It has been green, then red, then green, and it's a great day to be doing a webcast because obviously we've got the so much activity going on today from a planetary standpoint, with it being lunar aspects as well as the P index date. So it's October 26th. This is here. We've got new moon perigee. Our next webcast is going to be 2 weeks from today, on November 9th, when we'll be taking a look at the full moon and whatever else might be going on out there. Now, real quickly here, what I'm going to do is I'm going to go ahead and pull up the chart on the S&P 500, and later on in the program, we'll go ahead and go to some live charts, and I'll take whatever questions I can, and we'll be off the air at about 3:50, 3:55 or so. So what I've got up here, and some of this is a chart that you've seen, over the, I think I sent some aspect of this out last night or the other day, and so when we take a look at where we're at in the S&P, what I've identified here, you see really two bearish engulfings. There's a third one that is right here where my cursor is. And so this area here is really, the first line of resistance. This second line of resistance was the low of this March 16th area. And I indicated to you that, I could go from being bearish to bullish once we cleared basically the March 16th candle. So, and I don't have a line drawn here, but if we simply just took a look at, this is a head and shoulders that you've got up here pattern, this being the shoulder area, this being the head, which also happened to mark the high, the May 2nd high that we've got out here, this being the right-hand shoulder. So this, in essence here, this blue line is the neckline. And even though we've broken through this area, we haven't done it with conviction, and until the market moves up through this area, if it does move up through this area, then all we're dealing with is resistance, because oftentimes in a head and shoulder pattern, what you would do if the market is going to go up, and it would potentially go up and test this line right here. So, in order to do that, it's got a lot to get through because of the volume that occurred on the March 16th day. We're off to a pretty decent start. We're in an extremely volatile market. I don't have to tell you that. Just because it's a P index date of with 17 planetary indexes, because it's a new moon perigee combination, I wasn't exactly expecting the world to fall off of a cliff. That would be the easy trade. That's not really how the pattern here works, and we'll see that as we get into it. But I just wanted to make sure that, and I don't know what software, what charting software you might use, but this is a good chart to be able to go back to, maybe to be able to draw some of these things on your chart. And what we're still dealing with here is we're still dealing with this death cross, if you will, which as we've gone back through other charts, through some of the other newsletters, especially the Sunday newsletters that I send out, that this is just simply another confirmation of the fact that we're in a extremely bearish market at the at the moment, and probably for quite some time to come. Now, what we do during celestial charting is we pretty much are taking a look at the New American Ephemeris. And for those of you, and for all those of you new subscribers or listening on the archive version, welcome. And if you would like a copy of the New American Ephemeris, I suggest that you get it. It's a great guide to have. Starcraft Publishing is the one. Here's the phone number to reach them. I think it's like about $30. This area here has the moon phenomena, if you will. And what we really are focused on is both that as well as this area here, which is at the bottom of the New American Ephemeris, which is the daily aspectarian. And it has each day listed, and each of these days here indicate the relationship between, two planets, if you will, or the moon and the sun. And what we're dealing with today is we're dealing with a day where very unusual, having 17 planetary indexes. Now, when I talk about 17, this is the work of the original work that was done by Dr. Miller and Larry Pesavento. And in the New American Ephemeris, there's some additional planet information that's in there. And so I have all of the I have the ability to search through all this data to do my work based on their original work. I'm still compiling work based on the New American Ephemeris. Now, one of the things that we talk about is sacred geometry. When you're taking a look at relationships between two planets, what you really are doing is we look at these 5 specific angles. In this square, 90 degrees, opposition 180, sextile 60, trine 120, and conjunction all the way back to 0, if you will. And these are the 5 core relationships that we look for. These are what we call major aspects. When we take a look at the lunar phases, there's really these 5 primary areas. Right now we're dealing here with the new moon and perigee, and perigee is where the moon is closest to us and when it is spinning the fastest. And so this is the information that also is contained inside the New American Ephemeris. What we're here today to really take a look at is, the October major astro aspects and lunar date, where these are, these are not all the aspects for the 26th. You'll see that in a moment. These are all of the major aspects. So you can see listed here. If you just simply go back, this is square, which is 90 degrees. If you're new to this, you just simply can go back here and just take a look at the relationship between those planets, and so I have each of those listed in here for the month. What we're taking a look at today, you've got Venus square Mars and Mars sextile Saturn, but that is not as much of the importance as the mere fact, as you'll see in a minute or so. The mere fact that we've got 17 of these aspects, not major aspects, but 17 aspects in one day occurring. We're also celebrating, if you will, the new moon, which came in today at 2:57 p.m. So happy new moon, if you will, to everybody on the line. Now, the time that you'll see here, folks, this is ephemeris time, and if you back this up right now by 4 hours, you'll get back to Eastern Standard Time, and I believe at the end of next week, I think we maybe go back to Standard Time. And so then you'd be backing things off by 5 hours. Give me a minute here to get to our next slide. And what we're really taking a look at today is a combination of these effects. And this here is a study that I've done from 1800 to 2100. And it lists I have this broken down into these 4 columns. ET is referring to ephemeris time. And the original P-index, going back to the work that Larry and Ruth did. I have broken things down based on Eastern Standard Time, and still doing a study on Eastern Standard Time. There is a little bit of a distribution of dates that's a little slightly different than what you see here based on ephemeris time. But all the work that was done was really done in this column here. Today we've got 17, so you can see that there's 35, and you've heard this before, 35 over the last 300 years. That's 0.03%. And this column here is the ephemeris time with all of the new aspects that are in here, and then this is Eastern Standard Time. So that's what those columns represent. If we take a look at where we're at today, October 26th, you can see I have all 20 aspects listed. I have highlighted the ones, Ceres and Chiron were not work that was considered when Larry and Ruth were doing their work, and so I've in essence backed that out. I've highlighted, if you will, the majors, but really right here you're dealing with Venus square Mars, if you will. And so what is so important about that is that this is number 20, if you will, of number 20 of the 35. Interesting enough, before we came on the air, I was taking a look to see when the next 17 planetary index date was, and it's actually October 26th in 2015. So hopefully we're on the air to celebrate that one as well, and see what type of impact it has on the markets. Now, this chart here is a chart that just simply is showing the some of the cycles. You have a more updated one that I've included in your email, and if we have time this afternoon, we'll go back and take a look at that. And this just is simply to show you the importance of understanding when lunar phases are happening, and how often they actually have triggered either a high or a low in the marketplace. So you certainly want to be aware of that when it is that you're trading. Now, when we come to the 17 planetary index date, again, when we took a look at that list, on the new dial we had 17, on the old we had 17. And what I'm really just focused on right now is the old, where you've got 17 planetary index dates, really just to match the original work. So the last one that was out there was November 5th, 1988. And so what I want to show you here is that, look, even though the low wasn't put in on that day, and I don't know whether the high is going to be put in on this day. That's why I wanted to be able to go back and, for a number of reasons. One, it's always good to go take a look at the past and see what happened. And the reason that we trade the way that we do, the reason that we put in the stops the way that we do, is to say, well, look, we may be picking the turn, but we don't have to pick the exact high or the exact low when we're trading, and we've got enough room to give it some leverage. So in the case of November 5th, 1988, if we were celebrating this day and we were picking a bottom, you can see that it really took several days. So if it takes a few days and we're not stopped out, that's okay. That's what our wide stops are right now for in this volatile marketplace and what it is that we have. And if we break those other resistance areas, then what we'll do is we'll flip and we'll go short. But it's important to understand, when you take a look at these charts, the importance really, in my opinion, the importance of these days. You can see in this case here, this lasted from the middle of November all the way to October. So this lasted for basically 11 months. And so I think that what we put in today, what we put in over the course of the next week, let's say, just as occurred here in 1988, whether it's obviously right now we're dealing with highs, it's going to be important because it's a trend that could last for quite a period of time. If we take a look at the one that came in before that with 17 planetary indexes, you'd go back to 1984, January 15th, 1984. In that case there, the high of that day was the high, and everything fell off the cliff going into the July timeframe. So that lasted for 7 to 8 months there. So that's why the cycle that we're putting in here today in this area, I think, will be something of significance for a good period to come. If you go to the one prior to that, you're looking in 1967. December 28th, where you had 17 planetary index days. That one lasted probably the least amount of time of the ones that we've got the ability to chart. And you can see here that lasted all the way through almost April 1st, going back to January. So it lasted for a 4-month period of time. And you can see that the date that it came in, that still took a little while for it to work. So again, I'm not going to get too caught up in the fact of if over the course of the next couple of trading sessions in this volatile marketplace, the highs get taken out. And for you, and for you folks that listen to Larry, I know that sometimes he, on his show today, he was simply just talking about the highs of a couple of days ago, and if those get taken out, then this hasn't worked. In my analysis and taking a look at the charts here, that's really not an accurate statement, just based on past history here. If we take a look at the last one that we are able to chart, which is in 1939, this has really two here. You can pay attention to this. This is just simply if I were doing a study based on there being 20 planetary index dates, but in this case here on the old work, this still would have shown up as a P index date for Larry and Ruth. But in this case here, where we had 17 old planetary index dates on September 23rd, 1939. You can see that this put in a high back in September, and that lasted all the way through the June timeframe. So you're looking at a 9-month cycle. So that's why it really is important that, whichever way this market decides to break, I don't think that what we're looking at here at all is any type of a short-term cycle. So far, if we were to go back and take a look at it, the shortest term cycle that we would be dealing with would be a 4-month cycle that we have. So either way, I think that we will mark this as a significant period of time that will help us to identify our trades in the future. At this stage now, because of the retracement that we've done to some Fibonacci areas and the way that time and price have come together, and where we have volume inside the chart, we are taking the short side of the trade. The next P index date because I know somebody has that on their mind out there. When is the next P-index date that we'll be taking a look at? Based on the original work, that date does not come in until April 23rd, 2012. And that is going to be a P-index date where you have only three aspects occurring. And I'll flip back to my original study chart just so you can take a look at that. And when three aspects occur on the original work, that's occurring almost 2% of the time. Compare that to where we're at right now, where you've got it 0.03%, 35 out of 300 years. In this case here with 2,005 times out of 300 years. So this really does help you to identify and understand the importance of that. But nonetheless, the days where you have three planets an alignment, it also is an anomaly, if you will, and with happening less than 2% of the time. And I'll expect that will be an area where we'll take a look at a market turn. If we take a look at the next, and I mentioned this earlier, the next time we have 17 planets lined up like we do in the aspectarian, oddly enough, October 26th, 2015. So that was just for the heck of it, I wanted to see when the next one occurred. I looked at the ones for after that. So they do not always occur on October 26th each year. Just this one happens to line up the way that it does. Why, I don't know. So that probably leads to the next question, which was you'd like to know what the next P-index dates are maybe for a while to come. So here's a slide that's important. You can come back to this, if you will, and you can see that in 2012 there are no large P-index dates. The large P-index date is today. The rest of them, are smaller. You can see that we have some days where we've got 2 days that are lining up. So you can see, it looks like we have volatility to come, but really not until April. So I'm going to flip back to that other slide here real quickly so we can take a look at 2. And I'll just come back to this one right here. Now, when we get to a 2 planetary index date, you can see now you're still not even getting close to the power of the 17. It's not bad. You've got 497 out of 300 years, or, less than 0.5%. So it's not that it's not insignificant at all. It just doesn't come close to the significance of what it is that we're dealing with today. And again, the mere fact that this doesn't occur until 2015 again, just really shows you the power, or what I believe is the power of what it is that we are looking at, and why for many months we've been looking to this day. Personally, on a personal note, I was hoping, and maybe that's the case, I was hoping that this would actually be a low versus that the market would come in as a high, just simply knowing how long this could last. And but that was just simply, it is what it is, and we will play the markets so that they are to our probability advantage so that we can make some money. If we take a look at the multiple lunar events that we have, going on today, again, the moon being at perigee and a new moon coming in. And so if we come back, I've got some charts here that I'll just simply flip through relatively quickly. And the way that these are lined up for anybody that is new, the last time this chart here came, this was from an August 30th time frame. All of the charts on the left-hand side, you'll see some type of either blue, looks like a blue line. And where I have the chart on the left side is where you have multiple lunar events, which is what we have going on today. And so that you can see the significance of understanding when those lunar events are occurring. I also, on this copy of this chart here, happen to show the importance of when you have a number of planets within a 7-day period of time that are all at conjunction. And again, conjunction, and I'll just flip back to you here, is one of the major 5 aspects or angles that it is that we look at. And so those are pretty significant events. So give me a second here. I just lost the let me get back to that chart. That's this right here. So that is what is marked up here in February of 2011. That marked a very significant area once we ended up breaking through that, which is, where we're at right now. We haven't had this back-to-back type of event until I think the last time we had something like this was back in the 1987 crash area. In any event, you still have these multiple lunar events here. I'm going to flip through these slides just simply so that you have them so that you can go back at your leisure, or you can mark some of these dates to mark on any of the charts that you might have. This here going back to 2010. Let's continue on. So you've got some charts from 2008, some additional charts from 2008 with regard to multiple lunar events. You've got some from 2007, and always interesting to note these. Let's move down here a little bit further. And so I have a number of these going back for a number of years, and I don't want to dwell too much on this because I really think the more important aspect is really the P index date, and I also want to be able to go take a look at our markets, just see where we're at with regard to our trades. Also take a look at the calculator and make sure that I can answer any questions that we would have on that, or really anything else about any other trades that we have. So here's going back to 2001 with regard to multiple lunar events, and then we've got this here. So let's go ahead, and I'm going to go to the markets right now. So let me switch over live, if you will. Again, we've already been through this chart here on the head and shoulders pattern, and as also this neckline here of resistance and our bearish engulfing. So I believe that our stops will allow us to get up in case the market does decide that it wants to test this neckline. I think that will be I think our stops will be above this area or very close to it. So we'll take a look at that should the market decide to move in that direction and test that area out. I want to go ahead and let's pull up our ETF indexes here real quickly. Let's go ahead and take a look at the SPYs. One of the reasons that, again, that we took the trade in the SPY was because we came off of the high that we had from 2 days ago with some good volume. We came into that area of that March 16th low. We came in there with 202,000 shares, and when we came off it, we came down with 263,000 shares. Still with 30 minutes to go, you're at 229. So, volume hasn't exactly picked up, and we're, near the entry point. If you went ahead and took the short trades on this, we're pretty much should be at about break even for the day, because the top of this body here would have been where you would have entered if you came right in right at the open. Let's see, 327. Let's take a look at the small caps. So let's go over to the small caps. And, whereas in the last two sessions we were pretty much trading live, in our case here today, all of us should be in our trades. If you are not in a short trade, I still don't see any reason to not get into it. Again, we're not really trying to pick the exact tick, the exact high, if you will. And that's why we're using the stops, and I'll go back through the position size calculator. In this case here, what we're really looking for the small caps to get back underneath this area, get back underneath this bearish engulfing. I would also like to see on the SPYs, I'd like to see them get back inside. Let's see here. I would really like to see the... It's not on this chart. It's on the SPX chart. Let's go take a look at the Qs real quickly. Let's pull up the Qs and see where we're at. And so on the Qs, what we've got, you see that we do have volume. So volume is picking up there. We came in, we made the high with 61 million shares yesterday, 65. Today we've already had 88 million. So that is looking good for us. And what we do want to see is you'd like to see this thing, get down below this area here. This top of this is at 57. We're trading just slightly above it. But again, if you do have volume picking up, you can't expect anything less than the volatility that we've got. If we just simply take a look at what's going on with the dollar index here, on the dollar index, I think we should be pretty much flat, and you can see that we are. Now, what is interesting to note is when you take a look at the close of the dollar versus, I'd have to go look at the exact time. Let's just do that here. Let me change this to a 10-minute chart, and let me get back to, let's see, so it's 3:30, so we'd be dealing with 15:30 yesterday, just for the heck of it. So at 15:30 yesterday, the dollar index was right about here. You can see we're trading a little bit higher than that, yet the market is up 156 points. So there's a little bit of a disconnect there. You can see on the you can see that we did have some nice volume come into the dollar index up here near the highs, and you can see how the dollar index has pulled back really on some weaker volume. And so I like the trade that we've got on the dollar index, for the reasons that we've discussed through the newsletter, and the mere fact that we've come down to the 0.78, the 0.618 area. Let me change this back to the daily. Our trade on Bourne, let me just simply go ahead and call it up because it's not on this sheet right here. And in the case of Bourne, it's, it is down with the market being up, but and we continue to wait for the SEC filings. They don't have to be filed until about November 15th, but I do check each day. And this, again, looks to be like a stock that is under accumulation by a number of funds that are out there. And so this, again, looks to me to be like a much longer-term trade that we would be staying in. This is a great chart because it has volume at a number of different places at highs, if you will. In this case here, you've got a high of 822 with some nice volume, and it has not had a chance to get up there and test that, so it's an untested high at this stage. When you pull this back here, you've got volume up here at the highs on this chart as well. And so this does look like a good longer-term play for us right now. And as you watch this thing intraday, you can see if you've got too tight of a stop on here that somebody's going down and is picking up all of those orders. What I want to do right now is I want to go ahead and pull up the position size calculator and go over that. Give me just a moment to find that here. And I've had, and I really want to make sure that I go through this with you and make sure that you're using this when I'm sending out the trade information to you, and also have you type in any questions into the system. So in the case, and especially because most of my work is being done either late in the evening, and then I'm typically sending out the newsletters by about 8 in the morning, 8:30 at the latest, sometimes before that. And so like in today's newsletter that was sent out, most of the work was done last night. This morning I added the futures contracts, what was going on there, and so it's really impossible for me to predict exactly where the market might open. And for those of you that aren't in front of a terminal, if I'm giving out a trade and I just, I'm indicating that the price that I've got down there is maybe just an estimate, it's okay to just simply go ahead and buy at the open. And for those of you that are near terminals, you can just simply watch what's going on from a volume standpoint. But it is important to, so like on the SDS trade, the way that you use this is you simply just input the initials of the symbol that you use, in this case here, the SDS, and you would hit the search button, and it'll pull up the actual instrument that you're trading. And then there's just really two buttons here that you choose. In the case of the SDS, it happens to be an index ETF because it's an index ETF of the S&P 500. If we were trading Apple, you would, or just an individual stock, you would go ahead and hit the stock. And really what this is doing, what it's doing is I have 3 different rules set up for each of these 3. So, for example, if you're trading a stock and you go through this information and it tells you that you would be investing more than 10% of your portfolio in this in that individual stock, there's a warning sign that will come up. And in that case there, you can either adjust the stop, or maybe what you would do is you just simply would take less of a risk on your trade. And so, because I don't recommend for an individual stock having more than 10% of your funds in that. If you're selecting a index ETF, I believe it goes up to about 40%. If you're trading the S&P 500, I see nothing wrong with having 40% or less of your funds invested in that. If it's a sub-index ETF like we traded today, which was the energy sector, then I believe that is about a 30% number. So that's really when you're choosing either of those 3 buttons. That's really what's happening, is those 3 rules are coming into effect. You do simply want to check whether you're going long or short. In this case here, we're going short the market, but we're playing the inverse ETF. And we're playing the inverse ETF because many folks are only able to do that with inside some of their IRA accounts. And so in this case here, even though we're shorting the market, you just simply want to make sure that what you're selecting is the direction of the instrument that we're trading. So in this case here, you would select bull and go long. And then you're inputting your trading capital, whatever that might be. And the trading capital should be what the available cash is, shouldn't be what your total balance is, including all of your positions, just simply what the available cash is. And so in this case here, and you can put it in with a comma or without a comma, I'll just simply put in $50,000. It's going to default to 1% on your trade. And when you had hit that search button, it automatically populated the average true range for you. Now, right now, I adjusted the original stop multiplication factor that we were using of 2.7, which was really 2.618. I just simply rounded that up, and that was being used mostly for the weekly average true range versus the daily average true range. And so we're just simply going to have this default right now during this very volatile time period in the market. Take a look at today. Today, the market, from a Dow standpoint, has been up and down about 300 points. It's up 180 right now, and was up 100. It was down. I don't even know how far it got down this morning, but you've got these volatile swings that are out there, and so I like to use the 1.618 Fibonacci number. If you're going to change it, which you will from time to time in your trading, just try to the next one down from here might be 1.272. Sometimes I'll adjust it just a little bit because of maybe some swing points that I see that are out there, but it's a good default of 1.618. In this case here, you would go ahead and enter your entry point. On the SDS, let's see, it closed yesterday at, 21.16, so I'm pretty sure that the entry on that today was a little bit less, but in this case here, I'll just simply use 21.16. I don't recall where we're exiting on this trade here. Hopefully it's in the $50 range, but I'll just simply go ahead and put in $50, and you hit calculate. And, folks, what this does is it just simply gives you all the information that you need to review the trade to make sure that it's got the right reward to risk. Obviously, 22 to 1 would be nice, so it's probably not $50 where the exit's at. I just don't have that information in front of me. And again, tells you how much of your portfolio it is that you would be allocating to the trade, tells you exactly where the stop is that you can place, exactly what the per share stop is, and the amount of risk. If this had come back simply and told you that it was too much, in fact, all I'm going to do here is just simply change this to a stock. Go down here, hit the calculate button, and you'll see it just simply pops up a message for you. So all that is really being used is just simply to make you aware that it's possible that you're allocating too much of your portfolio to the specific trade. And in this case here, let's say that was the example. You've got a couple of options. You can come down here and you can adjust this. Your stop, but your stop, when the stop gets calculated, if you are not a technical trader, let's say, and you're not taking a look at Fibonacci expansions, you're not taking a look at swing points, then my recommendation is go ahead and, especially in this super volatile market that we're in, leave this at 1.618, and instead just simply come back here and adjust the percentage down. In this case here, maybe all you need is 0.6%, and then come down, hit recalculate, and voila, gives you about a 10% and tells you how many shares that you should go out and get. And in this case here, you're just simply going to round it. Don't go buy 232 shares. Go buy 200, 225, 250. Use this as a good guideline so that you also don't overextend yourself. And so, and if you're going short and you're using this from a short standpoint, and again, I'm not worried about the equity here, then this is going to be flipped because you're going to be coming in at a higher price, you're going to be selling at a lower price, and then it just simply will give you all of the calculations above so that you can go ahead and take that. Now, I don't know if you can see this on my screen, but most folks on their computer system have got print buttons. One thing right now that I'm working on is when this prints out, it prints out the blue background. And so if you can print this to a PDF file, many folks have that as an option on their computer system. If you print it to a PDF file, which will have a hard copy, it loses the blue, if you will, and then you can go print that out, and you've got that for your record. So that's with regard to the position size calculator. And are there some questions that you want to go ahead and and throw at me at this stage? Anything that I can help you with? Anything with regard to any trades that we're in? Something on the position size calculator? Feel free to go ahead and type in some of that information on the into the system right now, and I'm happy to take those questions. And while I'm waiting for somebody to type, I'll go ahead and grab some water. Okay, nothing yet. Let's go ahead. I'm going to switch over to the live market so that we can see what we have going on out there and wait for the first question. If there is one, let's switch out of, we took a look around Europe and see how Europe closed here. The DAX, again, rejected its swing point out here. Would have liked to have seen it close below that with conviction. But, again, we can just expect a lot of volatility with regard to our SPY chart, our lunar chart here. Today is obviously where you've got the new moon coming in, and this has worked really well. So I feel as good about our trades as I possibly can, and wow, no questions at all. That's pretty good. New sub. Tom mentions SGS and TZA daily trades. You keep for longer. I do keep for longer, not necessarily for a not necessarily a permanent trade, if you will, but I do take a look at these trades here where when you're using the average volatility calculator, it is a easier way to trade the triples and the easier way to get a little bit bigger bang for your buck. So, and just simply watch that as time goes on. What happens with a lot of folks when they're trading these vehicles is the stops that they're using, in many cases, they're way too tight, and you end up getting stopped out, and and that doesn't good. That doesn't work very well. Let's see, Steve. I've been wondering about take profit levels. Do you generally work with one target, or do you take a portion of your trade off at any level beforehand? What we do is we typically move our stops up as we're in a trade that is working, and let the market take us out. If you were to go back to the webcast that we did 2 sessions ago, while we were on live, we were long. We had adjusted the stops early in the morning. We adjusted the stops, I believe, prior to us coming on the air, and the market took us out, and then we went ahead and switched and went short. So we do take profits off. If you go back through some of the old newsletters, we've also closed out some of our positions. We're in Bourne right now, and we have a trade in there to take 1/3 of our profits off at a specific target. Even though it is a longer term trade for us, I did want to take some profits if we hit that area, and that's I don't remember the exact number, somewhere around 480, I think, something like that. If we break the high of 11,940 in Dow, would you switch to a buy? I'm going to pay more attention to the SPY chart. It's got the better pattern and signs of resistance, and so if I pull that up here, when we started this off, I'll probably be paying much more attention to the SPY, because the Dow's got 30 stocks. The SPY's got 500 stocks. I think the SPY absolutely gives us a better signal than being able to push 30 stocks around. The trade that we entered last night going short the energy, all I had to do once I had done my scans and it looked to me like we had a good trade set up was really take a look at 2 stocks, ExxonMobil and Chevron, because the weighting inside that fund was so heavily weighted towards those two stocks. So I'll look more at this chart right here, and if we break the neckline, and depends what type of candle formation it would be that we would come in here, then I would go ahead and go long, and I think we would be long for a while. I think that based on the study of taking a look at the 17 planetary index date, that whichever way the market decides to break here, that we're going to be in this pattern for quite a period of time to come. At this stage, I would say at a minimum for 4 months, and likely much longer. I think it is the weekly chart that I have on the S&P 500. And on the S&P 500, I was looking, folks, over here at this specific area, going back to the highs that we made in 2007. And there was this 12-week period of time. And at the stage that I was doing that, the amazing thing was that the 12-week period of time for us happened to be during this 26, during this week, if you will. This hammer here, we didn't get a close below it on the S&P, but we did get a close below an important hammer on the New York Stock Exchange. So the last time, if you were taking a look at these charts here, and you take a look at this down move, and we take a look at this down move, and then you happen to have this pattern here was looking very close to something like this, and just was coincidental. I just started counting the area here. In week 12, this thing broke through this last hammer that was out here, and that created a downturn. So, the mere fact that we're coming up to a 0.618 area, and knowing what it is that we've looked at on the charts, and look, it's my reading, it's my opinion of what it is that I see on the charts. Go back and take a look at that, see if you have a different opinion. But I do believe that we are setting up some major high or some major low in the marketplace, and if the volume towards the bottom wasn't so high, then I would be more in the camp that, okay, we could have put in a major low. But, with everything else going on in Europe and elsewhere, and the volume, it just, this is a classic ABC down. You got volume on the way down, and you've got lighter volume on the way up. I follow Brazil also. How to determine suggested stops on the calculator. You follow Basel. Thank you. I see I'm not wearing my glasses. I need to have my glasses on. So if you follow Basel, it's very easy to do that. Let's say Basel. I know so and I'm going to go ahead and come back here. I'll just restart this here, if you will. So let's say that Basel was going long the diamonds. As Basel trades a lot of, the Dow study. So you put in the diamonds, go ahead and hit search. There, just simply come back down and ETF. And let's say you're going long. I'm going to just start over here. Let me just clear this. This stock info button also will take you to some important information about a stock. And if you do hit that, it'll clear everything out. So let's just say we're going along the diamonds. And let's say that what Basel says in his newsletter often, he says, go ahead and take a 1/4 position in it. Is that correct, Ron? He'll come back and say, take a 1/4 position. So you'd go ahead and you put this is what I would do if I were taking one of Basel's trades. I put in my capital account. And he says, take a 1/4 position. Well, instead of 1%, I would take that to mean 0.25. So you're going to take a quarter position. And Basel says use a 80-cent stop, okay, or whatever he might give you. So just simply come up to the average daily true range, type in 0.8, and set this to 1, because that is simply going to be nothing more than multiplying this stop that he gives you times 1. So that's what you'll come up with. And then Basel will typically give you an entry price on the diamonds here. Let's see, yesterday it closed at 116.79. So you would type in whatever your entry price is. And let's just say, now I don't know if Basel is giving you a target or not. Whether he does or he doesn't, if you're just taking the trade, just go ahead and complete something in there. I'll just put $135. The purpose for putting a target in there is so that you can determine what the reward to risk is. But that may or may not be a part of what he provides you. But what this will do in using this will tell you exactly how many shares that you should buy. So in that case, if this were the trade that Basel or that Tom or that David were providing you, then you can utilize the risk percentage taken based on whether or not you're taking a full position or less than a full position, and then just simply round this. I would go ahead and make this 150 shares. So good question, and this is really designed so that you can use this for your own trading. I know sometimes I might provide information in a newsletter, and maybe I'm just focused on the Qs or the small caps, and you'll go ahead and take a different trade. Maybe instead of taking the triple, you'll go ahead and take the TWM. I know I got several emails this morning on that as well. And so what you can do is, if I am using a stop multiplication factor of something other than 1.618 in a trade that I send out, just simply, you're going to take the TWM, for example, take the TWM and just simply, use whatever the stop multiplication factor it is that I've thrown in there. And what I am doing for the most part is, when I'm placing a trade, I'm also giving you this top blue section here, and the purpose is so that you know what the information, so that you go back and easily use the calculator to identify your position size, and also in case you decide to trade some other instrument, you can take a look at what it is that we had out there and just adjust accordingly. How about time for another question or two, if you've got one out there? And I'll just flip back to the markets until I see something pop up. But these are these are interesting patterns. We'll see how these things do play out for us. Let's just go to the 10-minute charts, just see if we can see any volume characteristics that are going on out here. And this is a great tool, because I use this tool often while I'm working, just to be paying attention to charts. This is always a great tool for intraday trouble. I had trouble printing with the calculator. Do you right-click to print? You have a quick little button up at the top of my screen. Let me pull it down here, just so I can make sure it's on there. So I don't know about your browser or what have you, but up here I've got this little print button, and I'm able to just hit print there. I guess if I right-click, I guess there is a print. Okay, so there is a print. But what I was indicating is that if you, right now I'm working on a print button on the actual unit so that it gets rid of the blue part. Right now, if I were to go ahead and print this to a PDF file, I'm going to just go ahead and do that. And if you have the ability to do that, I think you can download the PDF software for free. And let me just go ahead and save this, and it will pop up on the screen here, I believe. And so when you'll see the PDF come up, it totally gets rid of the color. I just give it another moment. I've got several applications running. So, Steve, how do you determine the stop multiplication factor? The stop multiplication factor is something that I have been using for years, and since I trade the same system, if you will, Gartley's, butterflies, swing points, then depending on the volatility that's going on in the marketplace, I'll then adjust the stop multiplication factor. And so in a very volatile market, it's going to be typically at least at 1.618. Here is the PDF, and I'll come back to that question. So you can see, if you have the ability to print the original file to a PDF, it'll go ahead and get rid of all of the color that's in there, and then if you just go print this out, you'll have a nice clean version to go ahead and print. So hopefully that helps. And so right now, and I also like to use factors that are basically expansion factors, because the idea is to, the idea is this, that when we place a trade, we really don't care. I don't care whether you've got great Fibonacci or ABCs. It's not going to stop just on the dime. I'm always amazed when it does, but it's not just going to stop on the dime. And so what you want to do is you want to have a factor outside of today's true range. If you get into a trade and you get knocked out just simply because it was the daily noise, which you know ahead of time what that approximate daily noise is, then to me, you're getting stopped out too often, and you're taking losses, especially if you're trading 1%. So I like to use an expansion factor, 1.272, 1.618, or 2.618. And the original package that we had here and how we were trading, I was using 2.7. just simply was just an easy thing to do when I was describing to folks what to multiply it by, as opposed to saying multiply it times 2.618. So I like to use an expansion number. I don't know why these expansions work so well. I just know that they do, and that's why I use it. Now, there are times when I will adjust those down, and you've seen those. Depending on how long you've been a newsletter subscriber, you've seen me change those. Even last night, I felt that 1.618 was too narrow and 2.618 was too large, and so I used a factor of 2.1 on one of the trades. I don't recall which one it is right now. How about one more question? It's 3:55. And then I've got to wrap things up. But as always, you folks know it's easy to get in touch with me. You send me an email, and I'm usually back to you within a few hours, certainly within the day. And there's always the phone, and you guys are always welcome to call, whether it's the office or whether it's my cell phone. So I'm here to help serve you. Any other last-minute questions? Okay, well, I'll assume that is that the answer is no more questions, but any other questions you might send us. I think we have some nice entries on these trades here. We'll see which way the market decides that it wants to go, and what it's going to send off for us, folks. This is going to help. I would say that by the end of next week, we'll know which way the markets are going to go, and we'll know which way it is that we're going to be trading for at least the next 4 months, if not at least the next 9 months. And then we will, I do scans each night looking for both strength and weakness. Some of the strength that I'm identifying are, in case the market moves down, some very strong weekly or monthly hammer candles. And if the market moves down into those areas on lighter volume, we'll go ahead and pull a trigger. And likewise, I'm looking for a couple of other short stocks as well. So thanks for your time this afternoon, folks. And I look forward to speaking to you shortly. Take care. Have a great afternoon, a great evening. What scanner do I use? It's not a manual scanner. It is a proprietary scanner. Anyways, thanks, folks, and we'll talk to you later. Bye-bye.